and welcome back to episode 27 of Crypto My God. And markets are kind of stabilizing. We had some downward pressure on the CPI print, being the risk on of risk on assets. Bitcoin sort of reacted towards the negative for that, but then we saw a pretty aggressive buyback yesterday. So all of this is telling me that Bitcoin really is enjoying this ranged zone around 92,000 to 100K. And of course, we have to consolidate before any sort of big moves come. Now, something that was really interesting was Van Eck came out with a report yesterday that basically said, should all of the Bitcoin reserves proposals going through the states come into effect, the buy pressure would push Bitcoin to something like $270,000. So that's like insane. I'm not going to say that I expect all of those things to pass, but obviously that is positive pressure and I will take it. Now, what I want to talk about are some developments specifically coming from the government and some other bullish takes. So let's get into it. So we're going to kick it off with this note that I woke up to this morning, and I'm pretty happy about it, frankly. It says, just in, the SEC and the CFTC are exploring stronger cooperation on crypto regulation, considering reactivating a joint advisory committee to oversee emerging markets. This is coming from Cointelegraph. So the reason that this is really interesting is that we are seeing a total landscape shift. Obviously, I've covered the SEC in the past. Gary Gensler was the villain of villains for the cryptocurrency industry in the last admin. And that got a lot of people to really say, well, what if the CFTC took over? But we need to understand the CFTC is very adjusted to trading things like derivatives, like leveraged products, and in that result, they have a lot of intermediaries that are necessary, a lot of middlemen that are required to facilitate the KYC AML laws, and that just does not comport with DeFi. So the CFTC is actually fairly dangerous if we're talking about fully autonomous, permissionless infrastructure. Now, the why behind that is the ascent of A16z's Brian Quintenz into the top CFTC role. Brian currently sits as the global head of policy at A16z. And we've seen a lot of energy coming from Andreessen Horowitz to position themselves well in the current government hierarchy, and now establishing their chief legal representative as the head of the Commodity Futures Trading Commission is a pretty big deal. This means that we have friends in some of the more dominant seats, right? We have people that are sympathetic to crypto, that are at the very least not antagonistic, they're protagonistic, and they will be working to help out what they realize is, a new paradigm in how we look at value, money, transactability, and of course blockchains, which just simply are a better financial rail than the existing system. So with Brian's ascent, this is a really big deal. This means that the two major regulators of all things assets, trading, investing, etc., are looking at crypto with an open eye, right? Saying we want to develop a framework. We want to let people build this. We want to do it in the United States. And of course, A16Z with this sick new logo coming back to the sort of Art Deco style of the 1950s American Dynamism is known to support a lot of companies like Anduril, defense tech, and many, many crypto portfolio companies as well. So this is moving us into a really interesting position. Of course, when we look back in the past, one of my friends and probably one of the greatest legal minds in the cryptocurrency industry, Gabe Shapiro at Lexnode, had been warning people for a very long time, guys. The CFTC is very risky for crypto, much more so in theory than the SEC. The CEA provides a mandatory intermediation regime for various financial transactions. Previously, they've had a lot of open conversations about this, right? Basically saying that we're looking at DeFi derivatives platforms and that they may contravene the Commodity Exchange Act, that this is a bad idea and may not be legal under the CEA. So actually looking at a lot of the existing DeFi components, they were explicitly saying previously, guys, these are probably illegal, and if you put them into our camp, we're going to get you. Now, the thing that really held them back in the past was that the SEC would never really admit what these assets are. If they weren't securities, then they should probably be commodities. But then they came out with this crypto securities language, and the opacity just kept building layers and layers. This was part of the frustration, was that they kept saying, come in and register. If we're going to define you, but we're also not going to define you, right? They're going to say, you're probably a security, come talk to us, but then never actually define what a crypto security was. So this was all just like nuts. It was mental gymnastics, and it was the pain game, quite frankly. So Again, with Chris and A16z coming into the fold, you now have the influence of people that are not only, frankly, heavily invested in the crypto asset industry, but are also interested in breaking through that wall of suck, right? They understand the value that blockchain brings. Obviously, A16z is a venture capital firm. They're investing in things that represent the future, very early stage companies that will come to fruition later down the line, and they're extremely bullish on it. So there you go. And we're actually going to touch a little bit more on some of the bullish implications just from another announcement that came out later today, which is actually the OpenSea airdrop. And why is this exciting? Well, there's two real reasons. I bet many of you, my viewers, were participating in the NFT pump wave of 2020, 2021, right? It was a very exciting time. A lot of people got in, and OpenSea was the platform of choice. Now, with this airdrop, they have said two big notes. One, they're doing a retroactive airdrop, which meant if you were part of that NFT buying wave, if you were part of that hype, you are probably eligible for an airdrop. This is really exciting. Other platforms like Blast have said, yo, we're going to airdrop, but you got to get in, you got to do trades, and we're going to reward volume. That would have been a real kick in the balls for anybody that's already put capital into NFTs, especially if they went down. And now we're getting a confirmation that no, that's not the case. We will get retroactive eligibility, and that is fantastic. Now, the other big thing, and this kind of comes back to like the whole CFTC, SEC thing, is this line right here. Claim process will be simple and accessible. Well, first off, that's a must if you want to do an airdrop, because distribution is the name of the game here, and if it's hard and it's side friction, fuck it. But the second line here, US users welcome. Guys, I cannot express how big this is. Being behind the curtain in the cryptocurrency industry, every single business hires these expensive law firms. And what do they do for hundreds and hundreds of thousands of dollars? They say no. They basically have been telling companies, if you want to stay safe, if you don't want to put yourself and your family at risk, you need to push out the Americans. You need the US to be as far away from this product as possible. We create these wild webs of Cayman companies, BVI, Zug, Switzerland, Dubai, Singapore, all these things to create the visual representation that these are not in the United States. And one of the biggest pains in the ass from Gary Gensler protecting investors was the exclusion of US users from airdrops. Airdrops are free distribution events. They're a bootstrapping tool used in blockchain to do two things. One, to spread liquidity in an asset so that there's more trading volume. This actually pads volatility. And to onboard new users, right? If they give users access to the ecosystem, they expect people to come in and to contribute. Now, this is basically free money. It's a bootstrapping mechanism. The capital does come from somewhere. There's always a buy side or a funding side, but you know, if that's exhausted, then these tokens basically do a down and right move. But we've seen things, major platforms, take US users in the past, basically saying, we're going to do an airdrop, but you need to lock up assets, allow these US users to lock assets, and then of course at the time of distribution say, I'm sorry, we're geofencing you, we're not letting you in. To me, that's exploitation, it's infuriating. And also, why the hell would you keep Americans from these free dollars? Like, how is that protecting investors? It makes no sense. There's really no risk to it. So this is huge. And this is not only exciting for the people that can receive the OpenSea airdrop, but this is indicative of the thawing of the US ice cube, right? It means that a company like OpenSea Foundation, which is so big, has had so much exposure, and has major significant law firms attached, is getting the thumbs up and the approval to go after the US. This, to me, is signal that the floodgates are open. The US is fully back in play. Everything regarding the SEC and the CFTC, that will evolve over time. It's obviously a slower progression, but we are here. Deal with it. Sorry, I couldn't figure out the middle part. Now, last but not least, we have a very funny story, which is that CZ, the owner and founder of Binance, basically was pressured to release photos of his dog. This happened on Twitter, I want to say yesterday, maybe earlier a little bit. But he finally came out and said, you guys all want it, here he is. This is my dog, and his name is Broccoli, and he's got a little adorable story, but I gotta say, these kind of shepherds, or whatever he is, they're awesome. I've seen them in the past, super smart, super trainable, very good for defense, right? This dude will probably bite you in the dick. And CZ released it, and of course, we have this ridiculous onslaught of Broccoli. I just go over here and look at all the different tokens, and my God, I can't even tell which one's the real one. So this is kind of funny. I did see a chart pretty recently that just showed it going full pump, full dump, all in a half an hour. So it just feels like a very nice summation of where we stand as an industry right now. Yeah, you can look at it kind of like this, like two giant candles. This is a 30-minute chart, guys. I mean, this is like ridiculous. A 30-minute chart means each one of these candles represents half an hour. So we're up and we're down and just like LOL. So I do think this is symbolic of where meme coins stand right now. They're getting exhausted, end of cycle territory. Basically, people are trying to get out as fast as they can. So do stay safe out there. Don't get too far into these things. And hopefully what I covered today was useful for you. I do think we're on a bullish trajectory, even though it's painful right now. And hopefully the end of the meme coin mania will actually take us to a foundation of real revenue generation, real wealth creation, and with the CFTC and the SEC, real businesses that actually have a product, right? That's what we need. We need good products that are permissionless, that are decentralized, and that reward the users rather than just grifting off of them. So anyway, best of luck out there, y'all, and I'll see you tomorrow.